Good day. Today we are going to start the cost accounting. So we are just going to look at this concept. So actually the cost accounting, these are the costs of the manufacturing business, right? These are the costs of the manufacturing business. So a business that manufactures the products, a business that transforms the raw material into complete products. For example, raw material can be apples, then we're turning them to fruits. I mean, we're turning them to juice, right? Um, Manufacturing business is an enterprise that manufactures products from the raw material. Like I said, taking for example an apple, then we are transforming it into the juice. So that can be the manufacturing business. But then there's this thing that a raw material from another business might be the finished product from for the other business. For example, an apple for a farming business, an apple is a finished product, while for a business that makes juice, the apple is the raw material, right? Now, costing. It is a calculation of the cost involved in the producing of the products, right? And then so we have the units, the weight used to describe a single product in the factory. Okay. Now the direct material. Now this is a material or the raw material that is directly involved in the making of the product. The raw material needed to produce the product. So this is the raw material that is needed to produce the product. For example, if we are making an apple juice, obviously the raw material there that is needed, it is the apple, right? They're saying it is also called the direct material cost, right? Now we have the indirect material. So we have the direct material and also the indirect material. Now, which one is the indirect material? These are the materials that are indirectly involved in the process of manufacturing the product. So, for example, cleaning material, packing material, all of this, all those things that are not directly involved in the making of the products. Yes, these expenses they are there in the manufacturing. I mean, like they are there in the manufacturing business, but then they are not directly involved in the making of the product. Okay. Um, and then direct labor cost. This is a payment to workers who are directly involved in the manufacturing of the product. Now, this one, direct labor and the direct material, right? So this one is also those workers who are directly involved in the making of the product. For example, it can be someone who's a machine operator, right? So that worker is working there in a factory, right? So is directly involved in the making of the product. So this is a payment to workers who are directly involved in the manufacturing of the product. Then we have the indirect labor cost. Indirect labor cost, this is the amount paid to workers in the factory who are not directly involved in the production process. Okay, so these workers, yes, they are working there in the factory, but then they are not directly involved in the making of the products. For example, the cleaning staff. Okay, then now we have the factory overheads. So now the factory overheads, um, these are the expenses incurred to run the factory. So these are the expenses that are needed in order to run the factory, right? But then none of them are directly involved in the production process. Okay, you heard that. All the expenses that that are used in order to run the factory, but are not directly involved in the making of the products. We record them in the factory overheads. For example, the factory rent. Obviously, the factory rent is not directly involved in the making of the product. The factory rent is not doing anything there, but then it is a running cost of the factory. So it falls under the factory overheads. Okay, so the expense is here. Indirect labor and the indirect material are classified as the factory overheads. Well, obviously, because the factory overheads, these are the expenses that are incurred to run the factory, but none of them are directly involved in the production process. So, obviously, indirect labor and the indirect material, they are not directly involved in the making of the products. So, therefore, they also fall under the factory overheads. Okay, now, then primary production cost, direct material cost plus the direct labor. Okay, um, just want to explain something. And then we have the total production cost or manufacturing cost. It is the total cost to produce the product. Total cost to produce the product. This is going to be the prime cost plus the factory overheads. So actually, the prime cost here, um, it is the addition of the direct material plus the direct labor. So total cost of the production, right? And then we have the fixed cost. These are the costs that do not change irrespective of the number of items produced. For example, it can be the rent. For the rent, no matter how many goods you produce, the rent is still the same, right? And then we have the variable cost. So these are the costs they change according to how many goods you have produced. For example, the electricity. Obviously, the more you produce more goods, electricity cost will also increase, right? And then we have the total cost, fixed cost plus the variable cost. Okay, let's go to the next one. Now, I want us to come here. The work in progress. The work in progress stock. Okay, we have the work in progress stock. Products that have not yet been properly turned into finished goods but are still in the manufacturing process. So actually the work in progress stock, it is an asset to the business. This one, it is an asset to the business. So what you need to know about the asset is that asset is anything that is in the business that can be turned into money. Anything in the business that can be turned into money, that is an asset. Okay. Um, Work in progress stock. So these are the semi-finished products. And then we have the finished goods. Again, this one is it's an asset. Completed goods are ready for consumption. These goods are ready to be sold. So this one is also an asset. And then we have the selling and distribution cost. These are the costs incurred in the selling of the finished goods. So meaning that these costs, um, they are not the manufacturing cost. Okay, they are not the manufacturing cost. Actually, these are the costs that are created when the business is selling the goods. For example, advertising and the sales commission. Okay, so these are the costs. And then you have the administration cost. These are the costs incurred to run the business, but are not tied to the manufacturing or the sales cost, right? So these costs will include the office rent, salaries of office employees, depreciation of the office equipment. So actually the administration here We are just talking about the all the costs that are involved there in the office, right? Um, Now I want us to go to the ledger accounts. I want us to go to the ledger accounts. Okay. Um, so this, you know, once you grasp these ledger accounts, I can tell you that cost accounting for you is going to be very, very, very easy with just this. Okay. Um, the first one is the raw material stock. So this is a direct material in the storeroom, right? So obviously, if we were a direct material in the storeroom, so we can regard actually this as a trading stock of the business. So therefore, actually, this is an asset account. Raw material stock, this is an asset account. So it increases on the debit side and decreases on the credit side, right? Then we have the balance brought down, the opening balance. So not used last year. Okay, so actually here, this is a raw material that was not used in the last year. So now it is going to be the opening balance in the beginning of the financial year, right? And then obviously when we buy the raw material stock, it is going to increase, right? For example, if we buy it on credit, so the account there is going to be the creditors control because we'll be buying the raw material, right? And it should be increasing. But then it's going to increase with the creditors control account. And then if we buy it for cash, the account there is a bank, right? Then now, what happens is this. Um, some of the material must be sent to the factory. Some of the material must be sent to the factory. So what happens is that the business um, send some of the raw material to the factory. So when the business does that, the raw material has to decrease because um, the direct material that is there in the storeroom is decreasing, right? So it has to decrease on the credit side. So we are sending the direct material to the factory. So the first thing that we do is we must transfer it to the direct material cost. So as we know that direct material cost, this is right. This is um this is um this is an expense that is directly involved in the manufacturing of the product, right? So we transfer it to the direct material cost, right? This is an expense that is created in the manufacturing of the product. I mean, that is directly involved in the manufacturing of the product, right? So we transfer this to the direct material cost, which is an expense, right? Now, now after transferring this to the direct material cost, now we have to transfer this direct material cost to the work in process stock because now we need to put this direct material to work, right? So we must transfer it to the work in progress. So actually what we do is we close off this direct material cost to the work in progress stock, right? We transfer it to the work in progress, which is an asset to the business, right? um where is the work in progress? Right here. So we transfer this from the direct material cost to the work in progress on the debit side. So obviously the work in process is it's an asset, so therefore it increases on the debit side. Okay. Now After the direct labor, okay, before we go there, we are still in the raw material stock. We have the balance credit down. So actually, this is an amount left in the storeroom at the end of the year. The raw material left in the storeroom at the end of the year. Okay. Um, and then we have the direct labor cost. So the direct labor cost, like I said, um, this is a labor that is involved in the manufacturing of the products. For example, it can be someone who is operating the machine, right? So we're talking about the factory wages, right? So what we do is um, because these employees will be working in the factory, right? Will be manufacturing the products, right? So what we do is the direct labor cost, it must be transferred to the work in process. So we transfer it to the work in process, but then I will explain once we get there in the work in process. Okay, and then we have the indirect material. Now, what is the indirect material? I've already explained this one, right? So we know that this one is it's an expense. You can see here it is written the consumable stores stock reversal. Now, that's one. What are we talking about? If we're talking about the consumable stores reversal, um, what happens is that at the end of the year, if it is found that we have some, okay, let's come. We were talking about maybe the income statement. There in the income statement, we have the word consumable stores, right? So what happens is that the consumable stores, we are talking about the packing material, stationery, can also be the fuel, right? Consumable stores, these are the items that are consumable in the business, right? So what happens is this: at the end of the year, if it is found that some of these items they are still remaining or they are still unused, what happens is that the business transfers the remaining one to the consumable stores on hand, which is an asset, right? So at that time, the consumable stores on hand, it is increasing because we are transferring the unused to them, right? But then now, at the beginning of the year, what happens is that we have to reverse that consumable stores on hand now back to the expense, because actually we must transfer it to the expense. We're just putting it to the consumable stores because we know that at the end of the year, all the expenses they must be closed off, right? Now, so what is happening here is that we are reversing these consumable stores. In the last year, this indirect material, it was unused, so therefore it was transferred to the consumable stores. So now we are reversing it back. Okay, and then we have the indirect material bought. You can buy it on credit or for cash. So this is why it is written creditors control and bank. And then factory overheads. Now, the indirect material, the used one, right? The indirect material, the used one, it must be transferred to the factory overheads. Remember, I said that the factory overheads, these are the costs that are incurred when running the um, manufacturing business, right? Uh, these are the costs that are incurred in the factory. I mean, these are the costs that are incurred in the running of the factory, right? So we have to transfer this indirect material used, we transfer it to where? We transfer it to the factory overheads, because we know that the indirect material, it belongs under the factory overheads, like I explained above, right? And then the unused one, the unused indirect material, it must be transferred to the consumable stock, right? We transfer it to the consumable stock. And then we have the direct material cost. We have already talked about this one. Now, consumable stores stock. So we're transferring from indirect material to the consumable stores. So I've talked about this one. And then we also have to reverse the previous year indirect material. We are reversing it to the indirect material, right? And then now we have the factory overheads. So factory overhead, like I said, um, we record the expenses that are incurred when the business is running the factory, right? So we record them here. So note, we record them on the debit side. Then after that, we totalize them, and then we are going to transfer them to the factory overheads. We are going to transfer them to the factory overheads. I mean, we're going to transfer them to the work in process, not factory overhead, sorry. We're going to transfer them to the work in process, right? So in the work in process, like I said, this one, it's an asset, right? Work in process. So the balance brought down, this is the opening balance of the unfinished products. For example, here they say tables, because this business is the one of the way they are manufacturing the tables. Okay, so it can be any unfinished product. So, and then we have the direct material cost, direct labor cost, and the factory overheads cost. Now, actually, in the work in process on the debit side, we record all direct and indirect expenses to make the goods or the product. All the expenses, all the direct and indirect expenses to make the products, we record them here in the debit side. So that is why we record there the direct material, direct labor, and the factory overheads on the debit side, right? Then now, on the credit side, now once the product is finished, because this is a work in process, we are still processing that product, right? So once that product is finished, right, so that is ready to be sold, what we do is we transfer that product to the finished goods, which is an asset also, right? We transfer it. It is coming from where? It is coming from the work in process. So we come and record it here, because now it is ready to be sold. So we come and record it here. So here in the finished goods, we have the balance brought down, right? The opening balance. And then, so this is finished goods ready to be sold, right? They're coming from where? They're coming from a work in process, right? Then here in the credit side, we have the cost of sales. Note, this is not the sales, it's a cost of sales. Now here, when the business has sold the finished goods, so obviously the finished goods, they have to decrease, right? So they must decrease on the credit side. So they are going to decrease with your account of the cost of sales, right? Because we are not recording this with the selling price. So we decrease them with the cost of sales. Then we are going to find out that how much are the remaining goods. So we transfer this to the cost of sales account. Then after that, we know we have to transfer that amount of cost of sales to the trading account, right? Cost of sales. Then from here, trading account, if we want the gross profit, We know that in a trading account, we have the sales on the credit, and then on the debit is the cost of sales. So we just check. Obviously, most of the time the sales they are bigger than the cost of sales. Then we get your gross profits. Thank you.